There it goes.
Hello, hello. How are you today?
I am good. How are you?
Good, good. Thank you for attending the webinar on renting to owning, your home buyer and financial empowerment workshop. My name is Vanda Crossley. I'm a licensed realtor with EXP Realty. Oh, that's on there backwards. I'm a licensed realtor with EXP Realty, and I'm a licensed lender with Loan Factory. I can be reached at 773-678-1085. I'm a former educator. I taught at DeVry University here in Houston. They closed down all their campuses, and I love teaching so much. I got into real estate, and so now I mentor and I teach the real estate because my husband and I realized there was so many things that we as a community didn't know and didn't understand. So we thought we would get into the game and try to be a resource for people. So this is one of the things that I do. I do the home buying workshops periodically throughout the year. And I also have fourth Tuesday meet and greets where I like to meet people from the community just to come out and socialize, no really hidden agenda because people need different things in their life. And I want to be a resource for people for whatever they may need. It could be, a pool guy or a roofing person or inspector or whatever your talents and your skills are, come and meet people because you never know who might need your services. So I think we as a community are a lot, I guess because of COVID, we've been held in the house and socially isolated. And so I want to, bring that out to people. So I invite anyone to come out in the Houston area to our fourth Tuesday meet and greet. We're starting to have them at Taste, which is in Sugarland. It's a really great restaurant. And so this coming Tuesday, fourth Tuesday, we'll be there from 5 to 8:30 p.m. So enough of that. Let's go on to why you're really here. Okay, now let's get this thing to work. There we go. So what we're covering today is home ownership right for you, renting versus owning, credit and down payment strategies. What score do you really need or that you don't need? Loan programs and mortgages 101. FHA, conventional, VA, Texas, A6, DSCR, and more. And then the buying process step by step from pre-approval to offer to closing. And then I also touch on energy savings and building wealth because it's no good to have a beautiful house if all of your energy is going out the window because you have bad insulation. So we also talk about that and how think energy and real estate equals financial freedom. And then we also have Q&A, which would be your next steps, what you need to do. So tell me, Miss Brown, on a scale of 1 to 10, how ready do you feel with the home buying process?
I'd probably say I'm probably at a 7.
A 7, okay.
hmm Just need probably, I feel like credit it would be the thing that I need to tackle, and then finding the right program or loan um, for myself.
Okay. Is home ownership right for you? Everyone is not meant to be a homeowner. Some people are just meant to rent and not own because of the responsibilities of owning. Renting builds your landlord's wealth. Rent increases every year. You have no control over that. There are no tax benefits or equity gains. You can be asked to move at the end of the lease. The average renter pays between 18,000 and 2,400 a year in the Katy area. So depending on where you are, just multiply your rent by 12 months, and that's what you pay a year. And you have nothing to show after 10 years of payment. Now, somebody that is moving around a lot, they don't want to put down roots, renting is fine. Now, a lot of young people, they want to call themselves nomads, where they really don't want to have a house and a responsibility. They want to continue to be renting, which is fine because you need landlords too. So with owning, you every payment builds equity. Equity is that excess money you owe the bank for the house versus how much you've got built up in the house. You have a fixed mortgage. If it's 1,300 a month, it's 1,300 a month. Next year, it's going to be 1,300 a month, unless the taxes go up, which is a possibility. But it shouldn't be that much. But you're not going to get a stamp that says, now we want $200, $300 more a month for you to stay here. Mortgage interest is tax deductible available. Check with your CPA on that, though. It's yours. You can paint it, rent it, sell it, add to it. You can do whatever with it. Can't do that when you're renting. And the medium Texas home appreciates 3 to 6% annually. And then it's an asset that you can pass to your family. You can't pass that rental home to your child or your grandchild. You can if you're owning it. You own it, you pay for it, you can will it to them, you can quick deed it to them, and they have something that they can start their life with after you're gone. And feel free to stop me, Miss Brown, if you have any questions about anything.
Thank you. So, with the appreciation and that kind of is the hook for renters and things like that. But I've heard a lot on TikTok, like people aren't
Uh-oh.
getting the same appreciation that they used to. So people are kind of stuck in their homes when they want to move in 2 to 3 years. Is that true?
It is true because sometimes the house prices go down. Most times they go up, but sometimes they go down, like the economy we're in now because of the war. It's kind of like a buyer's market because there's so many houses that's sitting out there, and then the sellers are reducing the price, because they need to move and they want someone to buy it. So they're not really reaping all the equity that they thought they were going to get.
Got it. Okay, that makes sense. So, I should be looking at, once I purchase, I should be looking at to be in my home, would you say 5 to 10 years?
Yes, at least I'd say 7. Yeah, so 7 is right in between 5 and 10. Yes.
Okay. Okay.
Because
Thank
there
you.
are closing costs involved, and you don't want to, buy a house one year and then sell it because you're going to have closing costs and all that to deal with. So 5 to 7 years, if you're going to be in one place, is a good time to settle down. And then after that, then you can move on and you still have a little equity in your house to pay for those fees that come up when you're selling.
Got it. Okay. Okay. Thank you.
Okay. So you had mentioned about credit. A lot of people think because they have a low credit score that they cannot purchase a home, and that's not true. FHA requires a minimum of 480, and that's 3% down with the FHA loan. If you want to do conventional, they want 620 plus, and that's 3 to 5% down available. It's no more 20% down. That was a myth that years ago you had to have 20% down. I know when my husband and I bought our first house, the realtor told us, how much money you got saved up? And at that time, we had maybe $500. He said, well, come back when you have $2,000 saved. And so we went back and we, scrimped and stopped eating out pizza and all that kind of stuff. And we saved our $2,000 and went back and got our first little townhouse in Virginia. So my advice is to talk to somebody and see which one works for you and which one you can afford. The best programs and the more options you get, if your credit score is 640,
You're breaking up.
but if it's above 700, consider your grades. I'm sure they. Hello? Can you hear me now?
Okay, I think you're back
You
now.
can't hear me?
I think you're back now.
Oh, okay. I don't know what happened. Okay. I was saying if you had 700 credit score, that's the top tier, and you get the best rates and you get the easiest approval. that's where you want to be. Well, a lot of people aren't at that point. They're in the 600s. So come and talk to us and see what we can do to help increase it. But you can still get a loan even with a low credit score. You can get gift funds. You can have your parents, your grandparents, a wedding gift, a birthday. You can have people to contribute and help you get this house. They're allowed in many loan programs. And then student loans do not disqualify you. As long as you're making your payments back to them, they count that as, you're making your payments on time. So I think they're called income-based payments, IBR.
On the credit piece, with the being able to qualify, so I'm not as bad off as I thought I was.
Good.
And
Yay.
so, yeah, one step closer. But for credit repair, like, what do you suggest? Because, I mean, there are people that are charging like $200 a month to fix credit. I mean, is that worth it, or are there other options to work on my credit that cost less?
Well, how about free? Work on it yourself. How are you with working on it yourself? So you would take your Credit Karma report, upload it into one of the Chat GPT or Claude or some of those other ones. Or you don't have to put the whole thing in there. You could just tell them your scenario, like I need to pay this off. What should I do? And it'll give you a credit repair. They will give you letters that you could send to your creditors. You just have to customize them. And that's the same thing that the credit repair people do. They send letters on your behalf. So it depends on if you're a do-it-yourself type person or if you just want to hand it over to somebody else along with that $200 a month.
Got it, got it. And what is like a reasonable expectation? Because some people are advertising like, if I pay them that price, I can get it done in 30 days. Is that realistic?
I wouldn't say 30 days, but
Okay.
we do have a thing with one of the companies that I work with. I'll go ahead and say their name. It's Rocket, where they will do a free credit repair for you as long as the loan is registered with them through me.
Ah, okay. Okay, very good to know.
So some people look at their credit report and they see things on there and they try to repair it themselves, but then that could hurt when you're trying to get a mortgage. So it's best to let the mortgage company, the lenders, let us tell you what to do. Because some of the things that's on there is like written off. Okay, they're old. They're going to stay there. Don't even worry about that. We're looking at things that happened in the last year, 2 years. You know,
Oh, okay.
and then now there are ways you can, have your electricity reported, your rent reported. All these things can boost your credit. You're paying your car note on time. You haven't missed any of those payments. And then if you did miss a payment, they're going to want to know why. Why did you miss the payment? Well, my credit card was hacked. And you write this letter of explanation. Oh, well, that makes sense. Well, now we understand because you were paying good and all of a sudden you missed. So, sometimes just talking to us and finding out, what's going on would really help you.
Okay. Perfect. Thank you.
So before you spend that $200, come talk to me. Um, okay, I think we talked about this already. VA loans, if you're a veteran, it's zero down. Veteran and active military, and it's no PMI, which is private mortgage insurance. We also do DSCR loans. So if you're an investor, like your landlord is an investor, you can buy, let's say, a duplex where you live in one half of it and you have a renter in the other half of it. If your income covers the mortgage, um, you qualify for that loan and you can actually live there rent free or mortgage free. So we can talk to you about that. Conventional 620 credit, no mortgage insurance if you put 20% down, that's where we go with that 20%, which most people don't have. And then USDA loan is zero down. That's for rural and suburban areas. And most of the United States, to be honest, qualifies for USDA loan. It's just in the inner city where you don't qualify for the USDA loan. But like in Brookshire, Sealy, Waller County, places like that, a lot of homes qualify for USDA. And then once you get your home and you've been in it and you want to access that money out of it, it's called a HELOC, Home Equity Line of Credit. And in Texas, it's called A6. It's cash out refinance on the primary home. So that would be no investment property. And the max you can get out is 80% loan to value. Um, They won't let you get 100% of it out. They try to protect the consumer, so you can only get a max of 80%. And in Texas, the fees are capped at 2%. So the borrower cannot pay more than 2% of the fees. Ask me how I know. I got experience with that one. Any questions on that?
On that, like the fee cap of 2%, are there any caps on any of the other like the other loans on the amounts of fees?
No,
Okay. And those fees would be a part of my closing cost, right?
exactly.
Okay.
Yes. Okay. What are we doing here? Okay. Okay. The home buying process, step by step. First, you want to get approved, pre-approved. Now that you know your budget, it's time to shop. I can handle the mortgage, that would be one stop. So it's kind of like if I give you a credit card to go to Macy's. You don't know how much is on that credit card. You don't know how much you could spend. But if I tell you you can go to Macy's and spend up to $2,000, then you know, okay, I can't get this because it's $3,000. I can only get up to $2,000. Same thing with buying a house. You don't want to go and fall in love with this house. I love this house. It's $400,000, but you're only approved for 300,000. Then you shouldn't be looking at that 400,000 unless you got another $100,000 that you're gonna get from somewhere. But most of the time during the pre-approval process, we try to find out where your money is. Do you have it in 401k? You have some life insurance you can borrow from? Do you have savings? You have investments? You got stocks? We try to find all that out and see how much you really have to work with. Can you get a gift fund from somebody? And, we get them to send us a letter. Yes, I agree. I'm going to give her, $5,000 or whatever. So we find all that out. Then you go find your home. I um I am a real estate agent as well, but I would probably refer you out to one of my colleagues and have them find a home for you. We'll still work together, close together. And then once you find a home that you love, you make an offer and we negotiate from that because sometimes your offer may not get accepted with the terms you have in there. So you negotiate that. Then you do your inspection, which takes maybe, 3, 4 days for that to come through. You get your appraisal. They do a title search. We guide you through every step. And then after that, you close and get your keys. You sign your docs, feel like you're signing your kids away because it's a stack of them. You're gonna get cramps. They wire your funds, you wire in your funds, and then you pick up your keys, and voila, you're a homeowner. So this saves you time, money, and stress from the pre-approval to closing. And it can be a stressful process. I'm not going to lie. There'll be some things that we as lenders will ask for. There'll be things that your realtor is going to ask for. And you got to be on it. When they ask for it, you have to give it, within 24 hours. I know you can't always be on your computer, on your phone, and have those documents, but within 24 hours, we expect to get those documents so we can keep it going. Because some things don't happen until something else happens. Like when you're getting a house and you're getting it inspected, they don't. order the appraisal until after the inspection is done and option period is done to make sure that you're still going to go through with getting this house. Because some things may come up on the inspection and you decide you want to walk away. So you only lose your option money, which, $100, $200 is not bad, but you would get your earnest money back, which would be typically 1% of the uh, offer that you're putting in. So if it's $3,000, you put down 3,000. And that's one of the
Mm,
reasons why you do need to have cash at hand when you're starting your loan, your home buying process. Not that you can get it later, but you need to have it because you got to, take that money to the title company within 3 days of your offer being accepted.
oh, okay. Got it. And then, so within 3 days, I'm paying the earnest money. But what about the inspection and appraisal?
So you do pay for your inspection as well. That's usually $300, $400, depending on the size of the house and depending on the inspector that you get. And the appraisal, usually the lenders will, it depends on the lender. Some lenders will pay for it and then you pay for it at the end. Some of them ask you to pay for that in advance as well, because if it doesn't appraise and you don't get it, then they're not out of that money.
Got it. Okay. 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 And what are some things that I can do to make my offers stand out?
Hmm. Shorter periods. They sellers typically like a shorter option period, like 5 days, even 3 days, depending on, they don't like an option period of 20 days. You don't need 20 days to get an inspector out there and find out if your insurance is going to cover it. So a shorter period and then larger deposit. So typically we say 1%, but if you put down more, that shows that you're really serious and you want this house. And it shows that you can afford it. Some of the other things is paying for certain things like the title. Who's going to pay for that? All this is negotiable, but who's going to pay it? Is the seller going to pay it or is the buyer going to pay it? Um, what else is on there? Closing date. You want a closing date 60 days from now, or do you want it 30 days or 15 days? And those are negotiable too, because the seller might still be living in the house and they may need extra time after closing to move out. They may need those funds to move. And so all of that is something that the realtors would talk about and say, well, hey, can the sellers rent this house for a week after you close because they need to get things together? Or on closing date, is the house going to be empty and I'm going to be able to move in that day? So those are some things that can happen.
Got it. So I could be a landlord for a week or two.
You can be.
Okay. Thanks.
You
That's
can
helpful.
be. Mhm. Okay. Energy savings and building generational wealth. Um, switch and save. I do have a link. It's called thinkenergy.plus/CCS to lower your energy bill immediately. And I also give a free vacation voucher with that. Um, Energy is one of the things that all houses use. At Think Energy, we also have a home battery program that we're giving free to homeowners that sign up with our program so that their electricity won't go out. If their electricity goes out in the neighborhood, their battery kicks in and you won't even know that it's out. And it's free. And if I think you have to have a credit score of 700, but that may be changing. But if you're able to buy a home, you're probably eligible also to get this free battery. Your mortgage payment builds equity. In like 10 years, you could have 30 to 150,000 in home equity versus zero in renting. And that's subject to the home, of course. And then with the HELOC, you can get cash out once you own it. The Texas A6 program lets you access your home equity for investments, education, or business. I remember a lot of people when I was growing up, a lot of people would take money out of their house for send their kids to college. So that's still a thing. People are still going to college. Or if you need it for business, maybe your kid is not going to college, but they want to start a business. You can take that money out for that as well. Or you can use your equity to buy an investment property. You can get a DSCR loan, and you can still become a landlord, Janila. And with the rental income, you qualify, so there's no W-2s required.
Perfect. I love it. Now, how long do I have to wait after I purchase my home to get the battery?
It has not started in Texas yet. It was supposed to start the first of the month, but it's been delayed. So that's
Oh, okay.
something that's coming.
Got it. Okay.
All right. And your next step starts now. I offer free home buying consultations. My number is 773-678-1085. I can also get you pre-approved today with Loan Factory. I can also help you save on your energy now. I can do a free analysis of your electricity and I can explain it to you what's on there. A lot of people don't know what's on their electricity bill. They just pay it because they can afford to pay it, but they don't know how much they're paying per kilowatt, how many kilowatts they use a month. When their contract expires, Texas is the only state that has contracts for this. And contracts, I've seen some for 5 years. So they lock you in for 5 years with a $300 to $400 penalty. But it's good to know because if you don't renew it by the time it cancels, then they put you on a higher rate. So you should definitely know and put in your calendar, my electricity contract is over June of 2027. Call Vanda and see what they got. That's what I'm going to say. But we can help you analyze that and see maybe where some air is leaking out of your home as well. We can do a free in-home analysis, check your windows, and maybe you just need to put some caulking some places, make sure your insulation is at the right amount in your attic and things like that. So I have a company that I work with that can do that for you. And thank you for joining and join our next workshop. I don't know when it's going to be, but I am on social media, Vanda Crossley, and I am the EXP mentor on Instagram. So thank you for joining me today. And when you're ready to own, let's talk. You have any other questions, Miss Brown?
No, this was very good. I'm going to go ahead and click that link so I can get my pre approval and we'll go from there. Because you said you could tell me, like, if I needed to pay some things off with credit or don't touch this and leave it alone,
Yes,
right? Okay.
exactly.
Awesome. Awesome.
Exactly. All right. Well, thank you very much, and you have a blessed day.
You too. Thanks.